exercise 20-27. So in previous homework assignments, we have allocated raw materials and other costs into our various processes. In this case, from the lecture videos, it's the assembly process and the cutting process. So raw materials flow from raw materials to the first process, in this case, assembly process or department, whichever one you want to say. And then when they're done, they transfer into the cutting department. And when they're done from there, they transfer into finished goods. And then once they're sold, they transfer from there to cost of goods sold. So in this homework problem, we're going to transfer costs from one department to another. And then we'll eventually sell the products and have to journalize that too. So Galvin Company has a production process that involves 3 processes. Units move through the process in this order: cutting, and then stamping, and then polishing. So the order is important. The company had the following transactions in November. Look at the transactions here. We don't really need that yet. We can just go by this data here. So we're going to prepare the journal entries. Obviously, record debits first, then credits. So cost of units. We're going to journalize the cost of units completed in the cutting department. So if they're completed in the cutting department, then that means they're leaving the cutting department. And how does a process, or how do costs leave an work in process inventory account like this? They leave it by crediting, by lowering the account. So the cutting department is actually a credit. So I'm just going to skip the debit account, go to cutting. The credit is $19,000. And where are they going? Well, we have to know the order. The order is cutting, then stamping. So they're going to go to the stamping process. Next, we're going to transfer costs of the units completed in the stamping department. So we've got $23,000. Copy, paste. And they are leaving the stamping department. So again, that is the credit account. And where do they go after the stamping department? They go into the polishing department. And if they're going into a department, obviously that means they would be going on the debit side. Polishing, work in process. And then cost of units completed in the polishing department, $39,000. So that means they're leaving the polishing department. So that means it's going to be credited. And then where do they go after the polishing department? So the order is cutting, stamping, and then polishing. So where do they go after the last process? Well, after the last process, from our slides, the last process was cutting. So they go from the last process to finished goods. So finished goods inventory is going to receive it with a debit. And then we're going to journalize the sale. Let's see if there's any extra information here. Sales on account, 20,000. So it does have extra information. So it's on account. So if it's on account, that means we're not going to get cash. We're going to get AR. And how much was it? $20,000. And then notice it says do not record costs, as they will be recorded in the next step. So as always, whenever we do a sale of a product, we have 2 transactions. The first transaction is the sale amount. So our sales are $20,000, and that is actually the other account, sales revenue. Now remember, revenues increase on the credit side. So it's going to be either called sales revenue or sales, depending on what their chart of accounts says. They called it sales. And then cost of goods sold is 40% of sales. So 40% of sales, remember here's sales, 20,000. What's 40% of 20,000? Well, that's 20,000 times 0.4, that's 8,000. We know the debit is 8,000. Credit is 8,000. And then what are the what are the expense accounts that are affected? Well, remember, when the goods leave finished goods, they're going to go to cost of goods sold, and the expense increases with the debit. So the debit is COGS. And where are those finished goods leaving? They're leaving the finished goods inventory. So finished goods is a credit. And that's it.